top 5 crypto trading strategies. We often hear in crypto, you should control your trading should not control you. One of the most common problems with crypto newbies is that they don't know what they want to do. Due to a lack of clarity, they let their emotions and instincts get the better of them. If you're a crypto newbie, you must pick a trading strategy best suited for your needs and stick to it. In this video, we'll talk about 5 different crypto trading strategies: scalping, arbitrage trading, day trading, range trading, and buy and hold trading. Before finding the best trading strategy for you, subscribe to our YouTube channel. If you need help with anything in crypto, share it in the comments below and we will create a detailed explainer video on the topic. Not only that, but we will also send you $25 as a thank you. What is a crypto trading strategy and why is it important? A trading strategy defines how you will trade in the crypto market. A trading strategy gives the direction of what trades you will make, the prices you will enter and exit your positions at, the duration of a trade, and how much capital you can risk on each trade. Before entering any trade, you should know precisely what you want to achieve. Since crypto trading is highly risky, having a clear trading strategy before entering the market is crucial to minimize losses and take profits at the right time. If you execute your trading strategy, you will never get wrecked. Strategy number 1, scalping. Scalping is about accumulating small, consistent wins daily to grow your portfolio. Instead of big 40 to 50% wins, a scalp trade will usually target 0.1 to 1% wins. Scalping is a low-risk, low-reward strategy, and scalpers usually make 2 to 4% profit every day. The good part is, even if you lose a trade, you will only lose a small percentage of your portfolio, which you can recover with your next trade. Since you need a lot of wins, scalpers open multiple positions every day in order to meet their targets. To achieve their targets, scalpers use trading bots to execute their trades. Once your desired price point is reached, the trading bot will automatically sell your position. Also, scalping only makes sense with high capital. If you're only using $1,000 for scalping, you will only make $10 to $20 a day, which is like nothing. The ability to chart quickly and consistently make quick decisions is crucial to your success as a scalper. This means you will be required to spend a lot of time looking at charts, performing technical analysis, and always staying connected to the market. If you're up to it, scalping is a foolproof method of minimizing your risk and slowly growing your crypto portfolio over time. Because scalping can be highly challenging and draining, it is not recommended, especially for newbie traders. Strategy number 2, day trading. Although scalping is a great way to minimize risk, it is often criticized for being slow and less rewarding. Cryptocurrencies have the tendency to move 20 to 30% in the span of a day, and if you know which coins will move, you can make awesome returns on your investment. Day trading is a strategy where traders capitalize on trades in the span of one day. In crypto trading, there are bull and bear activities happening throughout the day, and there are specific times when the market is particularly bullish and bearish. Day traders use this to their advantage and capitalize on the daily moves of the market. Day trading is particularly lucrative for expert traders who can sniff which direction the market is heading into. Day traders require a deep understanding of the markets and experience in technical analysis. Although this trading strategy is not recommended for newbies, if you want to engage in day trading, be prepared to take some losses in the start. As with scalping, you need to think on your feet and always stay connected to the market. However, once you spend some time in the market, you will develop an understanding of how the market is moving. Day trading can be highly rewarding for full-time traders who are prepared to invest the time and money to master it. Although it is riskier than scalping, the risk level in day trading can be minimized using technical analysis and trading bots. Strategy number 3, arbitrage trading. Usually there are small discrepancies in crypto prices on different centralized and decentralized exchanges. Traders exploit those price differences and make good money just by buying from one crypto exchange and selling it at a higher price on another crypto exchange. This is called arbitrage trading. Since price on exchanges is determined by demand and supply, the potential of arbitrage trading is limitless. If you are a newbie, you are recommended to begin your trading with a small bag. Since you only need to research the price differences on crypto exchanges, arbitrage trading does not require technical analysis. You can start your arbitrage trading research at CoinMarketCap, which is an excellent crypto trading tool. For a deep dive on how to do crypto research on CoinMarketCap, make sure to check the video in the description. To perform arbitrage, you must create accounts on multiple centralized exchanges to capitalize on opportunities. Moreover, you should account for trading and withdrawal fees of the exchange because that will be eaten from your profits. Most importantly, arbitrage trading can be risky because if you buy a crypto and miss out on the price differential, you might make a loss. All in all, arbitrage trading is an awesome strategy for anyone who wants to make a quick buck without spending hours looking at charts. Strategy number 4, range trading. Range trading is when you determine a price range for a crypto and actively trade in that range. The best part of the range trading is that you use trading bots, so you can make money on autopilot. Allow me to explain with an example. Let's say you know that Bitcoin will trade between the $15,000 to $18,000 range. Now you can create a trading bot that buys crypto when crypto hits $15,000 and sell when it hits $18,000. Using this strategy, you can easily make 20% of your investment capital. The more close your range is, rewards, the higher will be the chances of making profits. It is fairly easy to research the ranges of big cryptocurrencies like Bitcoin and Ethereum. All you need to do is find coins that are oversold and overbought. Moreover, with range trading, your risk remains minimal as you have placed a stop-loss trading bot. So even if the market crashes tomorrow, you will not lose any money. Range trading can be done by beginner traders as it does not require any technical skills, just some basic knowledge of implementing a trading bot on your exchanges. Strategy number 5. Buy and hold trading. Buy and hold strategy, also called HODL in the crypto space, is when you buy a crypto and hold it for a few years for a juicy return. Instead of checking coin prices every week, hodlers will wait for bull runs to boost their profits. A common strategy used by hodlers is to dollar cost average into their favorite cryptocurrencies. Instead of buying large portions at once, you buy the crypto in small portions repeatedly to get a better price. With this trading strategy, you do not need to worry about price dumps or market crashes because you are waiting for the bull run to book your profits. Hence, buy and hold strategy eliminates emotion from crypto trading. You can also choose to take profits periodically and reinvest the money when the price of your crypto drops. Also, since you are holding for the long term, you can deposit your crypto to earn passive income with lending, staking, or liquidity mining on decentralized exchanges. If you would like us to create a guide on how to earn passive income with cryptocurrencies, let us know in the comments below. However, before you hodl a crypto, you must do immaculate research on the project. Without research, you will get overwhelmed by price dumps and might even end up selling your cryptocurrencies. How to pick the best trading strategy for you. These are some of the most popular crypto trading strategies. The strategy you choose will depend on your risk appetite, the time you can invest into trading crypto, and how you cope with your trading goals. Regardless of your trading strategy, you must learn to control your emotions and make rational decisions with your crypto portfolio. If you like this video, make sure to subscribe to the ShibaDoge YouTube channel and share your thoughts in the comments below. See you soon with another video.